Hi, Francis. You wrote a deep dive report comparing Hong Kong to Singapore as a regional business hub as well as a financial hub. As a regional business hub, why are multinational corporations choosing Singapore over Hong Kong?
There could be a few reasons for the multinational companies to choose Singapore over Hong Kong as their regional headquarters. I think the first key reasons for them to pick the Southeast Asian city-state would be about the hedging need for geopolitical risk when China and the Western countries still have a bit of the tension over the past few years. And obviously, Singapore could have a more neutral stance for the global companies to develop their regional business. The second reason I would highlight the more diversified economy of the city-state. It relies on 4 to 5 different pillars to support the GDP growth, manufacturing, including the high-tech industry, finance and insurance, wholesale trade and real estate versus Hong Kong. I think Hong Kong has been relying very heavily on finance and insurance together with the public sector spending. Then developing into the pool of professional workers or talent. Obviously, you may find a more globalized group of workers in Singapore just because of its more diversified economy, 100% English-speaking, culturally diversified pool of professionals, easier for the multinational companies to do hiring and to manage the region's business from Singapore. And lastly, we do see more targeted tax incentives for foreign companies to set up headquarters or business startups in Singapore than in Hong Kong.
It looks like Singapore has already won the race to be Asia's business hub. But what about in finance? Is Hong Kong still Asia's financial capital, or is Singapore catching up?
I reckon Hong Kong will keep its status as Asia's top financial hub in the coming 5 years, primarily because of the China factor. Hong Kong is the international finance center for mainland China. And there has been a significant financing needs from both the corporate and government sectors. And it has been reflected by the equity IPO volume and the bond issuance volume last year. Singapore, on the other hand, has so far failed to tape similar deal flows from its Southeast Asian neighbors. So in terms of equity and bond or fixed income businesses, Hong Kong may still maintain its lead over Singapore in the near term, but Singapore has been a much stronger forex trading center than Hong Kong. And on the other hand, we see that its wealth assets being managed in Singapore has been catching up really quickly. And Hong Kong may find it harder to keep its wealth center status in 5 years' time.
And lastly, both cities' property markets have been on divergent paths. Singapore's residential market has been red hot, but Hong Kong's residential and office markets have been falling. Do you see these trends continuing?
We believe the office vacancy rate in Hong Kong would remain at a very high level, maybe at about 16% by the end of 2024. Primarily because of builder demand from either local or Chinese corporate. That trend could extend into 2025 or 2026. For Singapore office, the vacancy rate has been much lower. As of third quarter 2023, the vacancy rate was only 4.7%. And we believe office rental may remain pretty robust in Singapore in 2024. In terms of housing market, the housing prices in Singapore may retreat a tiny bit after 3 years of rally. And that's a modest retreat, we believe. Relative to Hong Kong, there has been a wave of population exodus in Hong Kong since 2020, and it has really weakened the housing demand for the Chinese city. And we are waiting for some inflows from mainland China, but in 2024 we still expect a pretty muted residential housing market in Hong Kong.
Thank you, Francis, for your insights.